Hello, and thank you for tuning in to our weekly mortgage and economics segment. I'm Amanda Lee Alicea with realestatesiny.com. This week, we have a few reports to look over, rounding up the reports for the end of 2013 and some insight into 2014. That being said, mortgage rates dropped again this week, bringing the 30-year fixed rate to 4.31%, the 15-year fixed rate to 3.36%, and the 5-year ARM to 3.51%. In stock market news, the Dow Jones and the S&P 500 both took hits this week. On January 23rd, the Dow Jones opened at about 16,372 and closed on the 29th at about 15,739. Some believe this is due to the Federal Reserve's plan to reduce stimulus. The same week, the S&P 500 opened at about 1,842, falling almost 70 points and closing at about 1,774 on January 29th. Speculations have arisen that this drop may be a sign of the seemingly impending crash in the market, but only time will tell. Reflecting the drop in the stock market, Americans' confidence in the economy declined as well, according to Gallup.com's weekly survey. In their report, this week's net economic outlook score dropped to a low of -15. This week's drop is high likely due to the 318-point drop in the Dow Jones on January 24th. Prior to the drop, Americans had remained more confident, which brought the confidence index to -13. That being said, the index hasn't been this low since mid-December. The report reveals 55% of Americans feel the economy is getting worse, and 40% of Americans feel the economy is getting better. Overall, the decline in optimism can only be a reflection in the major drop in the stock market. The National Income and Product Accounts GDP fourth quarter and annual 2013 Advanced Estimates report was released this week, revealing an increase of 3.2% in the fourth quarter of 2013. This increase primarily reflected in positive contributions from personal consumption, expenditures, exports, state and local government spending that were partly offset by negative contributions from the federal government spending, residential fixed investment, and non-residential fixed investment. In the third quarter, the real GDP increased 4.1%. In more positive news, there will be a larger decrease in federal government spending, which may aid in our economy woes. United States pending home sales felt a sharp drop in December, as cold weather and rising prices put a damper on demand, reflecting a fresh sign of weakness in the nation's housing market recovery. According to the National Association of Realtors, its seasonally adjusted index of pending sales of existing homes fell to 92.4 in the month of December, a decline of 8.7%. Currently, the index is at its lowest level since the 92.2 in October of 2011. According to the report, new home sales rose an estimated 16.4% from 2012, and the existing home sales were up 9%. In December, the supply of homes on the market dropped 2.8%, the lowest since July. According to the Mortgage Bankers Association's weekly mortgage applications decreased 0.2% from last week, which includes the adjustment for Martin Luther King Day. The MCI, a measure of mortgage loan application volume, decreased 0.2% on a seasonally adjusted basis from the previous week. On an unadjusted basis, the index decreased 9%. The refinance index decreased 2% from the previous week. The seasonally adjusted purchase index increased 2%, while the unadjusted purchase index decreased 3%. The refinance share of mortgage activity decreased to 62% of total applications, its lowest since late September 2013. The ARM share remained constant at 7% of total applications. The average contract interest rate for 30-year fixed-rate mortgages decreased to 4.52%. The average contract interest rate for 15-year fixed-rate mortgages decreased to 3.59%, and the average contract interest rate for 5-year ARMs showed an increase of 3.25%. This past Wednesday, January 29th, the Federal Open Market Committee released their Federal Reserve press release statement with the details of their meeting for the month of December. According to their release, the meeting showed an indication that growth in economic activity picked up in recent quarters. News and unemployment revealed that although the rate has declined, it still remains elevated. The committee is looking to foster a surplus of employment and price stability in the United States. An expectation of expansion of economic activity at a moderate pace, as well as a gradual decline in the unemployment rate, should be in tandem with the plans made by the committee. The committee's sizable holdings of longer-term securities should maintain downward pressure on longer-term interest rates, support mortgage markets, and help to make broader financial conditions more accommodating. Additionally, the committee reaffirmed its view that a highly accommodating stance of monetary policy will remain appropriate for a considerable time after the asset purchase program ends and economic recovery strengthens. It seems as if our economic recovery has hit a bit of a bump in the road, and unfortunately, according to the numbers, all we can do is hope that things take a turn for the best. That's it for this week. Thanks for tuning in, and be sure to follow us on our various social media platforms with links below in the description. Also, don't forget that you can read the full Mortgage and Economic Report on TrendingSINY.com, which is a division of RealEstateSINY.com.